Very interesting day today. Started the day flat. It was calm. It was very calm for most of the day. But it was the calm before the storm. A little after 1 o'clock, we just started selling and selling and selling and selling. What was up with that? What happened before today? We had about 5, 6 days of just consecutive positive days. It was a lot of run. It's a lot of run. And that run was warranted. We're getting closer and closer to the opening of the economy. Disney in Shanghai was at maximum capacity of what they allowed, so people were still willing to go out. So there were some reasons for optimism, and that led people to be optimistic about the opening. But things didn't turn out that way today. Seemed like that steam ran out, and in an instant, the market kind of shifted its momentum downward. Now, it opened the day somewhat down, kind of slowly picked up a little bit, seemed very calm, just kind of like people were trading. No one was really thinking too much one way or the other. And at the end of the day, I don't think this is a crazy pullback. I said in the middle of the day on the Instagram story, I was buying the TVIX because I thought some sort of pullback was going to happen before the end of the week, and I wanted to protect my longs, make a little bit of money on something. Typically I'm not like that, but we were getting a little too hot. It seems like S&P around 2,900 is the max of where this range should be, and anything above that is a little too expensive. The prices aren't too attractive above 2,900. There's not a whole lot of reason to be buying. It's kind of more like hold territory. I'm not saying that you should sell. You should sell if you're up 100% on something and you want to sell 40% of a position, or it's a healthcare company that has really done well here, then you should probably sell all of that. But if it's a long, not necessarily a reason to sell, but if we're at 2,900, not necessarily a reason to buy, because look what happened today. We got a pullback. This pullback might extend until tomorrow, might go into Thursday, Friday, but I don't think it's going to be anything crazy. I think we should see a flattening out. I think there should be, in hindsight, this kind of period leading up to the coronavirus opening, you should be able to draw a line through it. Now, there will be a lot of volatility and a lot of chop in there, but as we said yesterday, bet on America, think long term, but be able to weather the chop. So be able to weather the chop that we see here and just acknowledge that's kind of what's going to happen. We're just going to see a lot of chop, and the market's going to get hot, and then people are going to be like, whoa, and then they're going to turn to the negative, and then people are going to come back in with their money because there's still an underinvested sentiment. There are times when the market in the past 2 weeks has had days where it's just gone up for no reason. And that's people who have cash, who feel underinvested and see the long-term potential. And that long-term bull run is here to stay. That's the long-term trend. We are in the long-term bull run. And those people are just like, I need to get stocks in my portfolio. Like, that's just what they need to do. But that is leading to people grasping for stocks above what are fair prices. And what's fair is in the S&P 2,800 to 2,900 range. Above 2,900, prices are a little too expensive. Below 2,800, I'm not a technicals guy. I'm not like a numbers guy like that. I'm just kind of giving you an idea. Like, prices are prices. Prices are prices, okay? So below 2,800, we're starting to get good prices again. 28 to 2,900, we're getting fair prices. Now, I'm not saying that the index decides everything, okay? I don't buy indexes. I pick winners. So it's case by case beyond that. But to give you some sort of rough idea, that's kind of how I'm thinking about it. So with regards to indexes, there's an interesting thing happening in the indexes. So they're led and over, largely weighted by a few stocks, Apple, Microsoft, Amazon, massive companies that have good balance sheets and aren't really as affected or as in a hurt state as companies with less cash and worse balance sheets. So we have to keep in mind that when the S&P or the NASDAQ or the Dow moves up, check what the big players are doing. Are they the ones carrying it up, or is it other stocks that are carrying us up? Because if it's the big guys that are carrying us up, you just got to keep that in mind. What about the rest of the guys? Do they warrant to rally? That's where you'll find your money-making opportunities. So don't focus as much on the market swings. Predict them a little bit if you want with a little bit of your portfolio. That's kind of what I'm doing with that TVIX. I'm saying, okay, we're getting a little too hot. I'm going to buy something that's going to make a lot of money if we are too hot. But play the long game. I'm not buying indexes. I don't think you should be buying indexes either. I think you should be picking winners for the post-COVID era of America. And if you stick to that, if you stay disciplined there, you'll make money. But do it when prices are better or are good. You can buy them fair, but if you're going to buy them fair, you have to be willing to stomach some chop like today. So maybe like tomorrow, we'll see. But I don't think this is a massive pullback we're going to see. I think this is we're a little too hot. We need to cool off a little bit. 6, 7, 5 days in a row of just rally and gains in a state like this where most states aren't even open. It's a little too much. So I think today was a healthy day at the end of the day. So until tomorrow, peace.